Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 16th of March, comes to you from London. And of course, it's been a dreaded time with coronavirus fears. I'm actually self-isolating myself, although I don't think I have it. But I've had some mild symptoms, and I've come into contact with people who've fallen in flu. So I think a lot of us are going to be sitting at home wondering what's going on. But I'm not going to look at the stocks today because really there's no point. They're all just is a sea of red, and it's too hard to analyze these big sharp moves. But looking at the individual picture, if we start by looking at the dollar is really seesawing around this key level on the cloud. Both on the weekly, we're holding dollar strength here. We've seen short-term strength. The dollar is looking pretty strong. We do have a downside target, so it is just making calling the dollar this week a little bit tricky. But for the moment, we are still in bullish territory. We certainly have had a seesaw of a ride this last several weeks, but we're back above the cloud. And that's despite the Federal Reserve's further action last night, really quite unusual on a Sunday. We've seen interest rates in the US cut to, they use a range in the US to 0 to 0.25%. So US interest rates are effectively zero, and yet the dollar is down by 1%. So it's very strange times. We see the dollar is down, but of course the markets haven't really responded very well to that cut, such drastic action. The euro is still looking weak long term. Medium term is looking better against the dollar. Short term we've got to cross the cloud. Looks like we will this week, and we've got a little bit of an upside target. So the euro is holding its strength. Dollar yen has been quite a strong chart on the short term. Medium term, of course, we've fallen out of bed, and the long term. So the yen is normally a safe haven, and so we have seen that move there. Sterling is down. It had a pretty bad week against the dollar last week, and so we're seeing sterling lower. We've got these downside targets for sterling, a new one just kicking here at 120. But of course, the picture is just generally quite bearish for sterling. If we look at sterling against the euro, we're also just falling lower here as well. So sterling is definitely the weaker currency, and against the Swiss franc we're down quite dramatically, down at 115 at the moment. Taking a look at Bitcoin, massive falls here on Bitcoin. We've gone from $10,000 in February to more than half that, and last week we saw Bitcoin fall from sort of $9,000 and went as low as under $4,000. So massive moves there to the downside. Bitcoin now looking very bearish indeed. The long-term lagging line hanging on, but when the chart does this kind of move, it's really hard to analyze it effectively. We saw the S&P 500 index up 9% on Friday, with the government and Fed action starting to have an impact, and was quite a big bounce, massive volatility. We see that massive sort of hanging man candle there. We're seeing really back to above the cloud, but of course it's all going to depend on what happens this week, and the coronavirus news is just going to have a big impact. So we're almost wasting our time looking at these charts. The Russell 2000, by the way, has still just stayed bearish. And that we're seeing smaller cap stocks really being hit in this sort of sell in everything mentality. The futures today, the S&P E-mini is down 4.7%. That's still holding us bearish below the cloud. We've got these downside targets, a further 11% here to play for. The NASDAQ E-mini down 4.5%. And again, a further 16% downside on the future. So it does suggest that markets are going to go much, much lower. Looking at the European markets, the FTSE's down 5%. So just making new lows here. We really are in free fall, I'm afraid. And the FTSE 250 down 9%. A lot of the small cap stocks just being so heavily hit. That's really terrible news for the market. The DAX in Germany down 7%. Gapping down this morning, new lows there, and really very hard to read where we go next. You'd have to go to really very long-term charts and look back at key levels. And the CAC Courant also 8% lower. I think the key thing is that those US indices have around 10 to 15% further downside on the targets. So it's really hard to see any other market bucking that move. The Japanese market was down 2%, and the Hang Seng down 4%. So again, looking pretty bad. A further 5-6% downside here on pretty much all the targets. So Hang Seng has got further to fall. China down 3%. That's starting to crack. Government intervention just not managing to hold, and we are just seeing a move towards bearish territory on that long-term chart. And lots of long-term downside targets here that have been a worry for the Chinese market for some time. The Sensex down 8%. So we really are seeing a massive fall off, and the Aussie market down nearly 10%. So we've seen a fall in the Aussie market from 7,200 to 5,000, and so that is just a monster fall. The Australian market also, of course, very resource heavily laden. We've got massive downside targets here, 41% and 23% for the Aussie market. Of course, it will be hard to see those come to play, but with other markets managed to only fall a further 10%. But the reality is that the Aussie market's looking very bad. The Brent crude down 7% this morning. $30 is the psychologically important level. We've got downside targets to just under $30, so it does look like we'll go lower this week. And WTI also heading lower at down 5%. So and with targets lower than that as well. US NatGas has held up relatively well, strangely. We're sitting between 160 and $2 on the NatGas chart, so we really need to see if we get a break of either of those levels. That's a fairly neutral position. Gold is down this morning. Gold normally a safe haven, but of course we've seen lots of funds having to liquidate all positions, and that is also having an impact on gold. So in this sell everything mentality, gold is struggling, but we do have quite big upside targets that have been activated, and we'll probably get another one once we've had this sell-off in gold. But for the moment, medium term, we just are testing the cloud at the moment. It'll be interesting to see if we can hold support there. This is a very big bearish engulfing pattern, which I did talk about last week. Silver is down 10%. Its industrial quality is having a bigger impact there. Demand for silver falling off a cliff like many other commodities. So we are seeing silver turning long-term bearish. A very, very different picture from the gold chart. The gold chart is, of course, still very much long-term bullish. We would only be bearish below 1370, where it's sitting at 1524. That's a long way north of south of where we are. And looking at silver, we've plummeted right through that. We've gone from $19 to $13 in the last few weeks. So really quite a scary situation. US 10-year yields sitting. We did touch 0.3% last week. We're sitting at around 0.7, 0.8% at the moment on the 10-year yield. And if we look at the German bond, we actually have come back a little bit off those highs, but we haven't activated this new upside target. But bonds have been a pretty strong feature in the market, of course. Taking a look just at some of the commodities I cover for a lot of our energy clients. We talked about NatGas. Coal still very much down. We've got downside targets. I've written a report for clients on this morning. Emissions are down 7%. They really fell out of bed last week, and that break has then meant that they're due to plummet. We've got a new downside target of 15 this morning on emissions. We need to break this morning's low to activate that, but emissions really now just falling completely out of bed. Dutch gas is down 4%. I haven't got a paint yet on MBP. I haven't got a price coming in yet on MBP, but it does look like we will, of course, break lower. MBP has held up fairly well due to the fact that we haven't been able to get LNG tankers into UK ports, so it has just held up on a slight shortage, but that we expect will come back the other way as well. So TTF much lower this morning. We are just still slightly bullish above the cloud, but we do have a downside target further to fall, so we're down 4% there. German baseload is hitting new lows. We've got downside targets here. 33.80 as our real downside target to look for. That was hard to believe before. We've been saying German power would have a 3 in front of it this quarter. Well, it will and truly has, and so we're heading lower. And most other power markets also falling lower as well. That's it for today. Until next time, happy charting. See you then.